For instance, Nvidia is now closer to $100 per share, down around 25% from its peak of $134 per share a month ago. Regarding mood, however, I believe that Nvidia will report in roughly 3 weeks, and I believe that it will cost less than $10. Get your Nvidia keychain as soon as possible. We are offering a huge discount exclusively to the first 100 orders. Help a lot because demand is still higher than supply according to all accounts. Yes, I am aware of John. That is the other crucial query. Though attitude has obviously changed, I don't think the fundamentals have altered all that much. Someone has been frightened. In a month, the Fed will begin to make cuts, and after that, there will likely be 2 more. That's why I believe the Fed has enough ammunition to keep us from experiencing a terrible recession. Theoretically, it may be less than $2 trillion, but it was more than $3 trillion. Yes, well, and keep in mind that Nvidia's growth matched its earnings growth. They earn money, the mult, but what is this and what does it do when it's down? It's down 32%, and I believe that for the past week, we've talked to investors, and part of that was to let them know what might be going on in the market. Nvidia is the stock for which they made the most money, so people are spotting this decline. That's where you make money. I had a great year. Let's avoid ruining it now and remove some money from the equation. You could actually divide the cloud into 3 categories. The first is AI from NVDA, which powers the models themselves, as you may know. That is the first thing you require, and it is the first thing you should do. It will not go away. The second section then discusses smartphones, followed by PCs. We have a lot more optimism about AI on cell phones. The stock price of Nvidia, the tech giant at the vanguard of artificial intelligence, has soared in recent years, and the company's technological innovations play a significant role in its valuation. Additionally, economic factors have a significant impact on stock price fluctuations and investor sentiment. Nvidia and the economy at large have a complex relationship, with a number of important economic issues having a big influence on the company's performance and, in turn, its market value. Let's start by talking about global economic growth. Generally speaking, a strong global economy raises demand for semiconductors, such as Nvidia's GPUs. Data centers, game consoles, and increasingly AI applications depend on these CPUs for power. The demand for the technology that Nvidia offers rises in tandem with the expansion of economies and sectors. The company's revenue growth and stock performance are directly impacted by this demand, which is fueled by economic success. Another important component of Nvidia's economic equation is consumer spending. The demand for gaming GPUs, a major source of income for the corporation, is directly influenced by consumer confidence and levels of discretionary cash. The demand for Nvidia's state-of-the-art GPUs is fueled by consumers' propensity to purchase expensive gaming systems and other tech-driven goods when they have more money to spend. This correlation between Nvidia's financial performance and customer behavior highlights the company's strong ties to the larger economy. Another important factor in Nvidia's development is corporate investment. The demand for Nvidia's high-performance computing solutions is driven by businesses' capital investment plans, especially in the areas of technology and data centers. Nvidia stands to gain from this increase in corporate spending as businesses spend more and more to upgrade their technology infrastructure in order to remain competitive. This business dependence on cutting-edge technology strengthens Nvidia's standing as a vital participant in the world economy. Therefore, the situation that most of those had in common was that they all had significant gaps and dips in volume. The market has been poor for the past 2, 3, and 4 weeks, and we'll see what happens with Nvidia after news-related earnings dips and gaps occurred at Microsoft, Amazon, and other companies. However, at this point, you don't get out of it or recover from it soon because of the drastic nature of that selling, the aggressive, and what you would call dispersion. Therefore, if and when things do work lower and the small cap has returned all of their gains, interest rates are another element that greatly affects the price. If you're looking to get an Nvidia keychain for less than $10, act quickly. Only the first 100 orders will receive this enormous discount, which affects the price of Nvidia's stock. The mood of the market as a whole and investor interest in growth stocks like Nvidia may be impacted by rising interest rates. Increased borrowing costs due to higher interest rates have the potential to slow down economic growth and lower demand for Nvidia's products. When interest rates rise, investors typically become more cautious, which causes Nvidia's stock price to fluctuate more as the market reevaluates the company's growth potential. For Nvidia, the current state of the economy has brought both opportunities and challenges. Although the world economy has shown resilient in the face of numerous challenges, concerns have been brought about by elements like inflation, supply chain interruptions, and geopolitical conflicts. The semiconductor industry as a whole has been affected by high rates of inflation and continuous supply chain difficulties. But these difficulties have been somewhat lessened by Nvidia's dominant market position and pricing strength, which has helped the business get through these difficult times more skillfully. From an opportunity perspective, Nvidia has benefited greatly from the AI explosion. The demand for Nvidia's GPUs has remained strong as businesses from a variety of industries make significant investments in AI technologies. Since Nvidia's technology is crucial for training big language models and enabling a variety of AI applications, the industry's rapid growth continues to offer prospects for the company. Despite more general economic difficulties, Nvidia's growth pace has been maintained in large part by this AI-driven demand. Nvidia's stock price and economic indicators have a complicated and nuanced relationship. According to historical data, Nvidia's stock has frequently outperformed the overall market during times of economic boom, indicating the high demand for its products in a developing economy. Indeed, I would say that Nvidia's stock has underperformed the majority of other semiconductor firms that are exposed to data center AI, as it has declined by around 30% since its June peak. The truth is that, despite the current corporate concerns, the Blackwell delay issues about macro and other issues, we still anticipate that Nvidia will dominate the data center GPU market, and we also see that in-house GPUs are performing well. Google is creating its own internal GPUs, much like Amazon. Alternatives to Nvidia GPUs, such as AMD GPUs, are also becoming more and more popular. However, we anticipate that Nvidia will continue to dominate a market that is expanding incredibly quickly. Therefore, I would suggest that there isn't much reason to be concerned about Nvidia's data center revenues. Even though the company is currently trading below the trough multiple of the 2018 to 2019 down cycle, we still expect minimal downside to value. The correct way to look at it, in my opinion, is that you did mention 40% of overall revenues. In fact, Nvidia also reveals that almost half of its data center sales come from the big cloud service providers. It's true that we still need to see some more revisions to what consensus is expecting for CapEx growth next year in order to make room for Nvidia to be able to meet expectations. But if you look at how much capital expenditures for the top 4 hyperscalers are expected to grow this year and next year, and you break that down between investments in AI and traditional infrastructure, but just 10 to 15% of the changes were made. On the other hand, Nvidia's stock has been more volatile during recessions as investor mood is affected by market concerns. But it's important to understand that company-specific elements like new product releases, advancements in technology, and changes in investor attitude also have an impact on Nvidia's stock price. In summary, there is a complex and convoluted interaction between Nvidia and the economy. Nvidia's success has been largely fueled by its capacity to innovate and take advantage of new trends, even while economic indices clearly have an impact on the company's performance and stock price. In order to evaluate Nvidia's valuation and investment potential, investors will need to keep a careful eye on both macroeconomic variables and company-specific changes as the global economy continues to change. Gaining an understanding of this intricate link can help one better understand the forces influencing Nvidia's future in the quickly evolving tech sector. Get your Nvidia keychain quickly for less than $10. We are offering a huge discount exclusively to the first 100 orders.